What's up everyone, it's Scotty with Money Vesting, and let's just talk about Nvidia here in this video. And of course, a crazy price action after hours, absolutely massive green candle, adding over $180 billion in market cap, pushing past $900 billion market cap, up over 24%, just hitting a new record high for Nvidia. Just absolutely incredible. So I'm gonna break down the numbers, the actual earnings numbers, and some of the more AI sort of focused introductions in terms of products and enterprise solutions, and then we'll also talk a little bit about the infamous valuations, of course. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining. Of course, getting access to all the buy and sell alerts, options alerts, trade ideas, everything is going to be included with that 16% annual discount available until the end of this month, and after that it does expire. So link's going to be down below if you're interested in joining us. So first things first, let's talk about the price action here, and we'll come back to the technicals here in just a minute. But incredibly strong green candle, lots of volume coming in, 24% green, trading at a high of $395 and closed at pretty much over $380 with the market cap from 754. It's going to be up like 24%. So if you do the math, 754 times 1.24, we're looking at an open of over 934, close to $935 billion, very much within striking distance of a $1 trillion market cap for this company. So let's just talk a little bit about the numbers. By the way, Nvidia's results sparked nearly a $300 billion rally in AI stocks. So it wasn't just Nvidia that actually rallied. There's a lot of other stocks, including AMD, Broadcom, Applied Materials, even to the extent of Meta, Amazon, Google. They were all pushing higher. All these AI stocks were rallying, and Nvidia alone managed to pull in close to more than half of that, of course, and almost 300 billion across the board for so many other stocks out there. Nvidia becomes the fifth most valuable US company by market cap value after shares jumped 25% on earnings. So now fifth most valuable company in the United States. Just incredible pricing power here coming in with the shares jumping so much, and the market cap now almost approaching $1 trillion. Of course, entering that sort of very elite club of $1 trillion companies, which Tesla and Meta were a part of. They're no longer part of that elite club, but of course we do still have Apple and Microsoft and Amazon and Google, and not to mention now Nvidia, probably becoming the fifth most valuable company by market value. So incredible record, right? This is just a big celebration type day, right? This is the type of day where you pop the champagne if you're an Nvidia shareholder, if you're an Nvidia owner, if you're an Nvidia employee, if you've got stock options, like hitting a new record high and eclipsing almost 900 billion, almost up to $1 trillion is a big milestone, right? It's not something that can be just kind of disregarded. It is a pretty big day for Nvidia and for everybody just around Nvidia, just shareholders, owners, employees, everybody around it. So huge congratulations first for this day. Now let's talk about the numbers. Pricing and sentiment is on one hand. Of course, numbers are a whole different story. So non-GAAP numbers for the first quarter, we did see increase quarter over quarter. They're still kind of lapping over some not so great numbers from fiscal year 23, so they're still down 13% on revenue, so $7.2 billion. Gross margins are pretty flat on a year-over-year basis, 66.8%, and operating expenses were slightly higher, 1.7 billion, and operating income was also lower on a year-over-year basis, and net income was also down on a year-over-year basis. But of course, quarter over quarter, these numbers are improving for the company, and diluted earnings per share was down about 20% on a year-over-year basis. But it's really a lot about the future guidance as well, and the company did guide very nicely. So Nvidia's outlook for second quarter fiscal 24, revenue expected around $11 billion, plus minus 2%, and GAAP and non-GAAP gross margins expected to be around 68 to 70% respectively, and GAAP and non-GAAP operating expenses expected around 2.71 to 1.9 billion. And GAAP and non-GAAP other incoming expenses are expected to be an income of approximately $90 million for the company. So this right here, that 11 billion, is the main driver, I think, for the 24% rally that we're seeing, because this, I think, is going to end up being, I want to say 50 to 60% increase on a year-over-year basis. So like if you come over to what they actually reported for the previous quarter, so let's just come back, and this is going to be for the second quarter of fiscal year 24. So the numbers that they reported today were ending in April, so May, June, July. We're looking for something in July. Let's just go back here. quarter ending in November, or ending in October. This right here, quarter ending in July, and they reported revenues of about $6.7 billion, right? So this is the quarter that they would be reporting for, which is a second quarter 23 over second quarter 24. If you do the math, 11 divided by 6.7, we're looking at an increase of about 64%. Yes, so 64% increase in revenue on the top line on a year-over-year basis. That's pretty solid guide, right? That's an incredible guide for the company. And this right here, data center, first quarter revenue was a record 4.28 billion, up 14% year-over-year and 18% quarter-over-quarter. Some of the things that they highlighted: so introduced Nvidia AI foundations to help businesses create and operate custom large language models and generative AI models trained with their own proprietary data for domain-specific tasks. So I think this is going to be huge for not just Nvidia, but for, of course, a lot of the companies that can, enable, cost cuts and increase productivity, efficiency, use the data that they already have to generate all these large language models. And then they also released this, announced and integrating Nvidia AI enterprise software into Microsoft's Azure machine learning system to help enterprise accelerate their AI initiatives as well. Announced a collaboration with Medtronic to build an AI platform for medical devices, and then expand its partner offerings, new products and services based on the Nvidia H100 Tensor Core GPU, including AWS, Google Cloud, and Microsoft Azure and Oracle Cloud infrastructure as well. So, of course, not to mention lots of initiatives being taken around AI, and that's really the main catalyst that's driving the entire stock higher, kind of propelling it to new all-time highs, is artificial intelligence, right? It's just those two words, AI, artificial intelligence, is really what's driving the stock to new highs. Gaming here, first quarter revenue, 2.2 billion, down 38% from year over year. So gaming obviously has been a little bit more of a weaker segment for the company, but that is obviously being offset by other parts of the business. And first quarter revenue at 295 million, down 53%. So again, these are very small businesses to begin with, so we can just kind of ignore that. First quarter revenue for automotive was 296 million, up 114% on a year-over-year basis. Now, balance sheet's still very, very strong, so I think we can skip that as well. $15.3 billion of cash. And again, they're sitting on over $24 billion of current assets, $44 billion of total assets, and their total liabilities is about almost $20 billion, with long-term debt sitting at under $10 billion as well. So very, very good balance sheet, positive current ratio, positive quick ratio, more assets than liabilities, and of course, more cash than debt, so they've got a negative net debt as well. Now, I do believe that tomorrow we're going to see a lot of upgrades. You're going to see a lot of analysts come out and be like, hey, we're upgrading Nvidia, price target raised, price target raised, price target going up, outperform rating, overrate rating. You're going to see a lot of that tomorrow. And I think it's going to start to increase the EPS estimate as well, given how strong the revenue number came in terms of the guide. So if we take into account, let's say $11 billion, and sequentially I grow those numbers out for 2024 fiscal year, and I'm assuming that they're going to be able to do at least over $40 billion in revenue, for 2024 fiscal year. And we plug in, let's say, a 30 to 35% net income margin. That gives me a net income of about $16 billion. Okay, so for 2024, net income, bottom line profitability is going to be $16 billion. Share count is going to be 2.5 billion, so that's going to be an EPS of $6.38. That's going to be a little bit of an upgrade from what analysts are pricing in. So right now you'll notice that for 2024 they're pricing in 457, but since there is going to be an increase in guidance from the company, and again there's going to be some revisions and models overnight, which you're going to see tomorrow, I do think that not only Nvidia has the potential, but analyst expectations are also going to increase to $6, over $6. It's possible that they achieve that in fiscal year 24. Now, a lot of it is going to be growth driven, right? Nvidia is not a value stock by any means, right? For value investors, the goal is to buy a stock below the intrinsic value, right? Buying it below the intrinsic value, you're kind of anticipating that the stock will eventually move to its fair value. With growth stocks, you're buying at the intrinsic value and expecting the stock will continue to increase as the growth in the fundamentals, the revenues, earnings increases, right? So growth actually comes into play. And that's the difference between value and growth stocks, right? And that, again, that's kind of mentioned in the book, The Most Important Thing by Howard Marks. Very, very nice book. I highly recommend it for all value or growth investors. Kind of give you a little bit more perspective on fundamental analysis, technical analysis, and more importantly, just talking about valuations in general. Now, when it comes to Nvidia, what type of growth rate do we want to go with? I'm going to show you the sensitivity grid, and I'm going to show you the different prices. But even if let's just go with 30%, right? 30% is just me being very optimistic about the net income growth here. 30%, maintaining net income growth of 30% over 5-year, 10-year periods is very, very challenging. It's very difficult, and not a lot of companies can do that, especially when numbers start to get really big, right? When you're working with $16 billion, think about by 2029, a net income of almost $60 billion. I mean, Meta doesn't even do that. Apple does about $90 to $100 billion, right? So for Nvidia to go up to that level in 5 years at 60 billion, it's not that easy, right? It's not that easy. So it is pretty optimistic, growth of 30%. First of all, the number's pretty high, and of course, the actual numbers that we're working with start to become too large, right? So law of large numbers simply states as numbers get bigger, they become more and more difficult to actually grow. So 30% is probably my most optimistic growth estimates, and 30 times P multiple is about as high as I'm willing to go. Because if you consider right now, Nvidia, let's just say 40 billion is going to be that number, revenue number. And right now it's trading at 940 billion. So 940 divided by 40, 23.5 times sales, right, on a forward basis. And 40 is still a bit on the high end, right, when it comes to estimates, right? Because right now they've already done 18 billion, 7 billion in the first quarter, 11 they're guiding for. So they would still need to do like another $22 billion in the third and the fourth quarter, which they can easily do if they just guide for 11 billion. So 40 billion, a little bit on the high end, but they're still trading at 23.5 times earnings. And 940 divided by 16, we've now come up to 58, 59 times, well, actually 23.5 times sales and over 58 times earnings. So valuation's definitely a little bit on the high side. But you also got to remember that growth is what's priced in. If the growth doesn't come in, valuation's too high. If the growth stays, valuation's reasonable, right? So that's really what the expectations are being priced in right now. So if you go with a 30 times P multiple and I go with a 12% discount rate, 10% margin of safety, the fair value for Nvidia as of today, pricing in today's numbers and 2024 numbers, ends up at $363. It closed at $380. So we're not that far off from the intrinsic value, but you have to remember that these are very, very optimistic assumptions, right? If you go with these assumptions and they don't hit, well, then there's just trouble waiting for you on the other side. And this is going to be the sensitivity grid. Let's say that you go with a 22% growth rate and a 22 times P multiple, then the fair value obviously ends up at under $200. Versus if you go with 38% growth and a 40 times P multiple, fair value is at over $652. But nonetheless, valuation's still too high. A lot of growth, like it's literally priced for perfection, right? It is priced for perfection. I think we can all agree that nothing wrong can go wrong for Nvidia. If anything goes wrong for Nvidia, then of course it's going to get re-rated. It's going to get repriced fairly quickly because the growth assumptions are just very, very optimistic for this company right now. So this is going to be my most optimistic number after today's revision, after today's numbers coming out. But if I were realistically going, about this stock, 2020 is what I'm willing to go for. And that would put me at roughly around 162, which obviously is way too low. And the stock's probably never going to get down there. And that's totally fine. There's over 8,000 stocks to choose from in the stock market. So Nvidia is not the only one that's kind of, in the market trading right now. So that's going to be the more appropriate fair value for me personally. But of course, the highest I could go to is 25 times P multiple, somewhere between 24, 26. So 194 to 210, somewhere around those levels is going to be reasonable in terms of the fair value. But all I'm going to say is just be careful, be cautious. Of course, if you have, been trading this stock, if you've invested in the stock, it's quite interesting. You have to take into account, how much allocation Nvidia is in your portfolio. Are you overweight, underweight? Are you at your target allocation? And then you also have to look at your thesis and whether it aligns well with what the company's price is trading at, right? So Howard Marks also has mentioned that if you're getting tomorrow's price today, that's going to be a pretty decent indicator for obviously taking some profits and selling. But again, you have to make that assumption for yourself. But a new record high. Congratulations to all Nvidia shareholders, employees, and everybody who's been a part of this whole journey. Almost $1 trillion market cap. And yeah, that's my whole analysis. Hope you guys enjoyed, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. 16% annual discount does expire at the end of this month. As always, happy investing. I'll see you all in the next video.